Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets of the corporate world. Today, we're diving into a report from Verizon, and trust me, even though it looks like dry paperwork, there's a little drama brewing beneath the surface about phone users, pricing, and a potential slowdown that's not quite a full panic, but definitely worth a closer look. Verizon just put out a report about some things happening right now and what they expect will happen with their business. Let's find out what they said. This is a standard report called an 8K, which companies use to tell investors about big news or events. In this case, it's Verizon giving a mid-quarter update, something they don't always do, which makes it a bit more interesting. This report came out on March 11, 2025, so it's a pretty recent snapshot of what's going on with the company. The company in question is Verizon, one of the biggest telecommunications companies in the United States. They provide all sorts of communication services, from phone plans to internet and TV. They have to answer to the Securities and Exchange Commission. You can find Verizon under the ticker symbol VZ. It trades on both the New York Stock Exchange and the Nasdaq. The report also lists a bunch of the company's debt securities. Here's where things get interesting. Under a section called Regulation FD Disclosure, that is short for Fair Disclosure, Verizon is sharing some information that could affect how investors see the company. Verizon is saying that they expect some changes for the first quarter of 2025 for their consumer group. The number of new phone users on a monthly plan called postpaid phone net additions won't be as high as expected. This is a key measure for phone companies because it shows how well they're attracting and keeping customers. Verizon is estimating their churn, meaning the rate at which customers are canceling their service, will go up a bit, specifically by 3 to 5 basis points or hundredths of a percent. They say that these numbers are partly because of raising prices. In addition to the churn problem, Verizon also anticipates that the number of new customers that the company got will be flat or slightly down from the year before. Despite these challenges in the first quarter, Verizon is confident that they will do well throughout the rest of 2025. Verizon is emphasizing that without the impact of its second number offering, it expects to have more net additions than it did in 2024. So, what does all this mean? Basically, Verizon is managing expectations. They know that customer growth might slow down a bit in the short term due to a combination of price hikes and potentially less attractive deals, but they think they'll bounce back later in the year. The second number offering is a way for customers to have a second number on their phone without needing a second device. Now, let's zoom out and see the bigger picture. Verizon isn't just competing with other phone companies like AT&T and T-Mobile. They're also dealing with changing consumer habits. People are holding onto their phones longer, switching carriers less often, and exploring alternative communication methods that don't require traditional phone plans. Verizon's management team is clearly trying to navigate these challenges by focusing on things like 5G, expanding their fiber optic network, and offering bundled services that combine phone, internet, and TV. But it's a tough balancing act. They need to invest in the future while also keeping current customers happy and attracting new ones. This report tells us that Verizon is confident about its long-term strategy, but they're also realistic about the short-term hurdles. They're not afraid to make tough decisions like raising prices, but they're also aware of the potential consequences, like losing some customers along the way. Now, what's my take on all of this? Honestly, I think Verizon is in a pretty solid position. They're a well-established company with a strong brand and a massive customer base. They also have a lot of money. They're not going to disappear overnight. However, the telecommunications industry is becoming increasingly competitive, and Verizon needs to stay on its toes. They can't afford to become complacent or lose sight of what customers want. They need to keep innovating, improving their services, and offering competitive prices. I think one of the biggest risks for Verizon is the potential for new technologies to disrupt the industry. Things like satellite-based internet services and decentralized wireless networks could shake up the traditional telecom model and create new challenges for Verizon. The company also needs to successfully execute its fiber build-out strategy in a cost-effective way. That's a lot of pressure on a team trying to stay ahead in a rapidly changing world. Overall, I'd say Verizon is a stable company with some growth potential, but it's not a slam dunk. They're facing some challenges, but they also have the resources and expertise to overcome them. Whether they can do that successfully remains to be seen. Thanks for watching. If you found this analysis helpful, please give us a thumbs up, leave a comment below, and subscribe to Corporate Decoder for more insights into the world of business and finance.